What's going on, everyone? It's Jake Yeaton here, and in today's video, we're going to be talking a little bit about real estate opportunities for buyers in 2021. We're going to read the news, but before we get into that, make sure that you smash the like button. Also, hit the subscribe button. That would really help me out a lot at growing this channel. And then also just shoot me over a text at 207-222-7589. From there, you will be notified of any and all content that I make. And you can also ask me any of your real estate questions right there. Without further ado, let's get into the news. All right, so this is from Forbes, Real Estate Opportunities for 2021. So let me go ahead and read it. When the markets seized up during the spring of 2020, it became quite difficult to get real estate deals done. Even though investors were able to buy assets in some kind of distressed state, banks weren't physically open to be able to finance them. Now many banks are open for business, but they also have become more selective in their loan process. This is just pretty standard. You know, it's nothing crazy. But what I really want to highlight here is this right here is the big fallout last March. It caused the real estate community to start thinking about upcoming opportunities. But then the stimulus checks kicked in, unemployment numbers rose, and PPP loans were issued. This stimulated the market, which gave a false sense of reality about what was really going on, and the short-term market stimulation made it difficult for real estate buyers to find opportunities to make the right trade at the right price point. Then institutional investors like hedge funds and larger private funds had cash to deploy into real estate. This is very true. After all the stimulus money was pumped and is continuing to pump into the market, it's inflating, as everyone knows, it's inflating not only real estate, but stocks, Bitcoin, everything, because it's uncertain. It's uncertain of what the future is. And so everyone's scrambling and putting money into what they think is a safer asset other than cash, it seems like. And because of that, you had a lot of people that were not career real estate investors. I would classify like just a standard realtor, a career investor as well, because they already know what's going on in the market and stuff. And when they see a house that's distressed in a certain neighborhood, they know, unlike everybody else, they know that this house will be able to be flipped or be able to be rented out really easily. And it made these people so you didn't have that. You just had a lot of mom and pop and individuals deciding that they want to invest in real estate, right? And that all happened at once. And it's just made these deals really difficult to be able to come across. And as it says down here, then institutional investors like hedge funds and larger private funds had cash to deploy into real estate. What that ultimately ended up meaning is really big opportunities like commercial space, multifamily real estate, farms, timberland, open lots that could easily be developed. Those often provide investors with a much higher yield and cash flow than just buying a house and renting it out to one family or person. But because of that, because it had higher yields, hedge funds and larger private funds decided to put money into these assets, because as it states down here, if you watched what happened in March, you saw the stock market crash rapidly, which then it sent shockwaves of fear across institutional investors who said, maybe this is our exit. Now, obviously, the stocks have risen, they've recovered, some have more than recovered, but because of that fear and that uncertainty and people thinking this is the new 2008, back in March, a lot of institutional money, big money, pension funds and hedge funds and such, went into all of this real estate, which made real estate investors who didn't have a lot of capital, who had just enough capital to invest, they kind of got pushed off to the side, because these institutional investors were able to just outbid you. And from my understanding, these institutional investors also, they get to a point also sometimes where they just have to invest in something to show their investors something. So they'll overpay for something and then kind of deal with it then, maybe lie to their investor or maybe not lie, but just say something that's not fully certain of themselves, but they project confidence, like, we overpaid for this apartment unit and we're sure that it's going to pay off, but you're going to have to be patient. One of those things. Skipping down to this paragraph, this was good news for real estate investors. The competition was spending its funds, but now those institutions are in wait and see mode after giving a forbearance to many of their borrowers. They're waiting to see who emerges viable. As the noise clears up and we're starting to gather ourselves and act a little bit more normal, we're starting to see more write-off opportunities present themselves as investors will cut their losses and exit their assets, sometimes without the profit they were hoping for. This will allow for more opportunities for buyers. This is true. People, like I said, back in March were scared. Institutions were scared, investors were scared, so they pumped their money into a variety of things. This is why, in my opinion, Bitcoin has just skyrocketed. Tesla. Every day, if you pay attention to even just Yahoo Finance, you just see what are the trending stocks. It seems like every day some group, probably all you Robinhood users, are just deciding, GameStop that's the stock that's going to pop for the day. Various things like this, right? And it's just making these little mini bubbles just pop up and pop up and pop up. Well, this happened with real estate too. People were unsure, so they dumped their money into real estate, and here we are. But now that these institutional investors are trying to get out, other investors are starting to get out right now. People are uncertain how the real estate market's really gonna fare, because you also have to think of this. A lot of people overpaid. A lot of people in the institutions overpaid for real estate just to get in, and now they want out. It's all that short term thinking. So because of that, if you are a real estate buyer, please go to agentsjaketrust.com. I'm very connected with a lot of real estate agents that are investor friendly. And from there, they'll be able to help you find opportunities in your area because of what's going on right now in the real estate market. Continuing to read, I'm going to read a bit more now. If there is a fallout in the pricing, then some smaller investors can take advantage of it because they're more nimble, right? So it's almost an advantage for smaller investors to watch that kind of thing happening. When a lot of this big money has already been used up and spent in settling assets, then 6 or 9 months down the line, the real opportunities can emerge. That's when smaller investors can really take advantage of what's going on. Sorry, these are bothering me. When you look at all the lights and stuff, when you look at a lot of larger institutional investors, particularly public ones, right, that have to report quarterly, if they come out in something that underperformed, if they come out in with something that underperformed or even was a loss, they usually get dinged on value or share price. But in 2020, banks were looking at their assets as a free pass from the perspective of, can we cut our losses and count this as a wash? No one is going to be critical of that perspective, which can lead opportunities being created. In this situation, the seller just wants to get out of the deal, but if you can deliver the exit with certainty, you could end up getting a fantastic buy. This trend will continue well into 2021. That is very, very true. As we have noted. So please go to agentsjaketrusts.com and find an agent in your area that is investor friendly, so you can start investing in real estate when these opportunities arise, and they will arise. When you look at a lot of the larger institutional investors, particularly public ones, I'm rereading something. Now though, we're all zoomed in. That's a little pun there, to really understand what the long-term effects and changes to the real estate market are going to be on a personal investment level, particularly with the scope of real estate. Everything moves on such a massive scale, both to the positive and the negative side. And right now, There's quite a bit of negativity associated with the investment side of things, but there are still a number of different opportunities to be slotted in. As long as you can be really mindful of each deal and execute on a deal-by-deal basis, that's how you will win. Don't look too far in the future, one deal at a time. Finding an agent at agentsjaketrust.com. I cannot emphasize that enough. This will help you, and this will help you cut through all the negativity noise and all of the bubble noise. And there are bubbles brewing, right? So this article is basically just explaining there's a little bubble, money's moving out of the bubble, it's going to deflate. We're going to see opportunities arise like we did a couple of years ago. Now I'm just gonna, this very last one is very important. When everyone else is greedy, you need to become fearful. When the deals become harder and harder to find, that's when you know to keep a sharp eye on what's going on in the market. They're really hard to find right now. Even as like a realtor, right? I'm dealing with a home buyer who we cannot find this client a home. Nothing on their end. It's just homes go like this. And I live in Bangor, Maine. There's like 30-some thousand people in like this city, and we're kind of just shoved up in a corner up in Maine, right? It's even crazier in like my old market where I lived in the Seattle area. Homes that are over $1 million will sell in 3 days. It is outrageous, right? So people are getting greedy. Interest rates are at an all-time low. The stimulus money is, because it's going to every individual, not every individual is on food stamps and in a very difficult spot. A lot of people have their jobs, they're making money. This is like extra money just because, and because of that, people now have a larger down payment. It's not enough to really make a huge impact, but enough, right? So I hope that was interesting for you. Comment below and shoot me a text of what you think about these opportunities, and if there's any other real estate opportunities that you know out there or that might be brewing to help out everyone, right? We're all in this together. We all want to be able to better ourselves, right? And also make sure to smash that like button. And again, if you're looking for these opportunities, please go to agentsjaketrust.com. All right. Until next time, bye-bye.